All right, so welcome everybody to the Bookmap Academy coaching and mentoring. We do this every Thursday, as you know, the goal here is to give feedback. Bookmap is showing order flow. It's showing you the transactions. It's showing you the orders in the order book historically and in current market as well. How to read it, how to use it, how to wrap strategies around it, and then feedback on your strategies and your content from the different coaches, and we can have Q&A in here as well. Go through the disclosures quickly and then move on. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This just ended. We just, well, I'm sorry, no, it's still on until midnight. I'm sorry, it's on until I think 2 more hours. Is that right? It's till the 13th, but it is UTC time. So if you guys still want to, if you're still involved in trading in this, you got a couple hours to make it all back or lose it all. Anyway, it's been a really interesting, wild ride in that competition. Just I got to check it out. I haven't looked at it for the last several hours here. And let's see how the guys are doing. We gave them a lot of leverage in this competition here. Yeah, I mean, wow. Pretty cool. Like these guys, one guy, Stevie, was up on top here, just beat out here by Nepo last couple hours, it looks like. Yeah, huge leverage in here. So in a few days, these guys have netted $350,000. Our Blue Jacket competition started June 10th. You can still join this. You can join this until the last day of the month, but sign up now, use your phone, or go to bookmap.com/bluejacket, and note that you'll get twice the credit or the consideration for in any of the content that shows trading activity from the Bookmap chart. All right, and that's the same here in the Academy. The same idea. 2 times the credit. So we did this exactly why, like Valifan was saying earlier, he's been busy, hasn't been able to fill out his spreadsheet. This was one of the big reasons we offered this. So if you trade from the Bookmap chart, you don't have to you can have half as many pieces of content for your quota here for your Academy. All right, use it. Trade from the chart. You can trade in replay mode. We're looking for just good content with good trade activity in it. And then congratulations here to the May Blue Jacket winners. So Valifan, congratulations, great job. You had a ton of content, really good, high quality. And then Dune Runner as a second prize runner-up. Yeah, Valifan, you'll get 3 months of Bookmap for free with data, and then Dune Trader or Dune Runner, I think you get 1 month of Bookmap, but no data, I believe. Let me just double check that. I think so. Yeah. Anyway, something like that. All right, let's move on anything else to cover in here? I think that's it for all of the housekeeping stuff. And as we had promised last time, we're over like 2 hours last time. We're not going to do that this time. I felt really bad. Rob Crash, F16, and Valefan were all waiting in here. And at the end it was like, well, yeah, thanks for coming, but do you mind if we cover you first time next time? So that's what we're going to do, and we'll start with Rob, and then I think I've got Crash, and then I've got you, Valefan. Rob, let's turn on the mic for you. I think you're in here, and let's get going. Let's see, is Rob? Yeah, there he is. Okay. All right. So Rob's started off with his Top Step evaluation account and started posting in there. And he's got some great stuff already, and I really like it, Rob. It's really great to see you putting together this content with this intent. Here's what I mean. You're looking at your continuation pattern. Okay, here's your impulse move. Lots of chop in here. You see the pullback in here. This is where you went short down here, and this is where you covered here. And then you mark up a lot of things in here. First off, you've got your, more or less you've got your checklist in here. You're focused on your content, and you know what you're looking for, and you're targeting this high liquidity down in this area here, took your profit with a kind of a measured move in here. Fantastic stuff. This is where I feel with criteria checklist, as well as your intent of you have a visual in your mind of what to look for, and then how to trade it too. Open it up to the coaches, and if anyone has any kind of comments in here. I think we just have Stan in today, the pullback here, the volume still favors the sellers. You have your VPOC, and then shifting down, high liquidity below. You know exactly what you're looking for, and then look at the take profit here. Right in that kind of high liquidity area. Now it went through, but who cares? Like this is where that playing in replay mode can be really helpful. Okay, what did I see in here? What kind of shook me out? Why didn't I stay with it? Exactly what you're saying right here. You're nervous about shaking it out or getting shaken out and stuffed, but this was what you were looking for in terms of a measured move. You've got your target of high liquidity, done deal. Look for the next one, and then improve on this. So, for example, in here, right in here, this is can't zoom anymore because you got such a high res monitor, but you might be able to see right in here some of the buyers coming in after high liquidity getting filled in some of these areas on the way down. There is a risk that this will happen. Okay, so you got out a little bit in front of it, and not high volume here into that area, and you start to see buyers. It makes sense to me. Now what happened? Ton of selling comes in, okay, and drives it lower, but we don't know that, you did what you thought, and you had a plan, and you traded it, and you had a good result.
Can you hear me?
Yeah.
Yeah. So basically, it's all just the same setup I'm trying to do every time. I want to be able to do it thousands of times to where it's just instinct. It's pretty much what you have on the little video in the learning center, the continuation setup.
Yeah.
And when I see that VPOC shifting down, that's how I know, okay, there's kind of a consensus. The volume is starting to head one way or another.
Yeah.
And you can see the impulses too. Yesterday had lots and lots of good examples, but for some reason I just kept hesitating. I guess there's a little more having the pressure of doing this evaluation because I really want to pass it and everything. And then I hesitate when I see really good setups because they were all over the place yesterday. I must have seen at least 4 or 5 really good ones. It just went to the moon yesterday. Uh, but I just hesitate in there, even when I see everything lined up, because then I'm thinking, oh, what if I?
Oh, just lost him.
Oh, can you hear me?
Yeah.
Yeah, it cut out for some reason. Well, yeah, for some reason I see all of the check boxes lining up, and then I still hesitate for some reason, out of fear of losing, or maybe I get distracted seeing, oh, maybe it's not the way I think because of something on a higher time frame chart, but I want to really be dependent on what I'm looking at in Bookmap, because that's once I get into the zone on Bookmap, I'm able to do a lot better, spot these trades.
Yeah. Um, I actually I have quite a bit to say about that. What you just mentioned, because it was really well said, and you had fear. You're putting pressure on yourself. You're trading an evaluation account and you really want to pass. That kind of pressure, and then hesitation, then I would say, like, don't put that kind of pressure on yourself. Trade smaller, and it shouldn't feel like that. We all want to win, we all want to make money, but like Robert Rother was saying yesterday, he's like, he doesn't really even care. Like he says, I don't have to trade. So if he doesn't have to trade, my God, I mean, there is no pressure. It's just like he's just going to wait until there's something good, and then just take that. So the pressure's off. Now, another one is, like, sometimes you feel the pressure when either you're tested, like you're being evaluated, or you're feeling the pressure to make money, to make ends meet, and that's really challenging, and a lot of pressure to put on yourself for stuff like that.
Well, I guess 2 things. There's I was kind of, I'm going on vacation, see my family later at the end of the month, and plus we have the rollover next week, which makes things kind of difficult to read
Yeah,
with the order flow. So I was like, oh man, I really want to cram in this thing, be able to pass it, and be able to go on vacation, tell my family, hey, look, I did it, you know. So I was just trying to push myself, being like, man, I really want to pass all of the requirements for this evaluation. So I got some good news to bring over, because a lot of people, they either don't know what trading is, or they just think it's kind of crazy that you're trying to do it. So it would have been nice to just have some proof to take over there and be like, hey, look, I'm doing it.
yeah,
I just achieved something really good here.
yeah, yeah. No, I hear you.
Yeah, a lot of people have no idea what this even is. If you try to start a conversation with a typical person, they're like, what even is futures trading?
Right,
Yeah.
right. The thing is, it is similar to what we were just talking about, though, is you're putting that pressure on yourself, but the market is the market. You can't control it, so it really is very challenging environment to and kind of unfair to yourself to put that kind of pressure on yourself, in my opinion. I mean, like the way Scott says it is, you're trying to enforce your view on the market, and it doesn't care. So it just does what it does, and you're trying to just, take bits and pieces out of it. But I don't know. I I hear you. It was a nice thing, uh, but putting that kind of pressure on you may affect your trading.
Yeah. I mean, I do feel the heat, when I'm in there, I'm going, okay, I see a lot of stuff looks like the setup, but then something's telling me, oh, something's just a little bit off about it. And then I'm going, oh, should I get in anyway? Just, because I need to get in here and do something.
Yeah.
But, I mean, anyway, I do get in a lot of good trades. And,
Okay. I mean,
and, I have some other pictures I put up more recently in the Academy chat, but,
yeah, I've got.
you see how much I left on the table on that trade, and then I have others. I'll get in. I only make 3, 4, 5 points. When I could have gotten like 10 or something.
Yeah.
And I feel like I'm getting out too early, but I'm trying to use like the measured moves, like we've been talking about. A measured move into high liquidity. That seems like a pretty reasonable point to exit, right?
Yeah. Yeah. Exactly. Exactly. And I see you using the trading journal now too. Fantastic.
Oh, yeah. I got 3 different journals. I got that one on Bookmap. I've got the R Trader Pro one because Top Step is connected to that.
Uh-huh.
And then I got the thing on the Top Step website.
Okay. Okay. Yeah, great. I mean, fantastic, using some of these tools. I don't know. I mean, I don't have. I just know that I like what Dan had copied in here. Scott Placini repeats in every session, every week. Like, you can't impose your will on the market. It doesn't care about your stop loss or your break even. And every time I feel that kind of pressure to perform like that, I might see things in here that I shouldn't take. And then all of a sudden I'm in a loss, and I lost back or gave back what I had gained when I was more rational. So, if you, maybe some people, maybe like yourself, the pressure works, but it's something to consider. Only you can answer that. So, Stan, I don't know, how you have any comments?
But I found very great what you said. I would say it's
You're a
quite
bit
big.
faint, Stan. I don't know if we can pump up the
Is
volume a
it
little.
better? Is it better now?
A little bit.
Sorry.
Okay, that's better.
Okay. All right.
Yeah.
So yeah, I just want to say it's maybe why checklist might be a good solution to really build your confidence. You should not hesitate to take a trade. If if you see everything on your site, why not jumping? If you have your stat, if you know how it works, if you have the confidence. So maybe, as Bruce said, to lower your risk to in the first time, and then with the potential to scale when you will have this confidence. And I know it's a little bit easy to say after, but maybe for the entry, to enter with more sellers, with more volume. Um, so I don't know if you set a stop order or if you just enter market at this time.
Yeah. I was just doing a single ES lot there. I think that picture's ES, right?
Yeah. Yeah.
Yeah. So everything I've been doing, it's either been one ES or one NQ lot.
Hmm.
Just a single lot in and out. I'm just keeping it real simple.
All right, yeah, I would just maybe consider the volume, but still, you have it, so that's perfect.
Yeah, it's a good comment, Stan. I was actually going to comment on that too, but if I look at this now, and you know, let's be real about it, and I hide, you know, all of this here, right? And we're going forward like this. You know, we've got a lot of stuff here. Like you know, the sellers drop it. We got some chop back and forth. Sellers take it on here. We have exhaustion here. We have some buyers, a lower high, exhaustion. Sellers, a lower high, you know, exhaustion on the buy side, and then some selling coming in. Looking pretty good. And one more sell. He gets another bit of a pullback, and then he sells here. Now you know, it might have, you know, risen back up here and then failed up here, you know, knock some stops out and then turn around and go. But yeah, you got caught up a little bit in here, but I don't know. I think I would have made that decision too, something like that. In fact, maybe I would have even gotten in here. But you know, here it really starts to pick up, and you know, you got it. Anyway,
there's that auditory part when it starts to pick up too. You hear it with the I got the OPI and the VPI. I got it set where you know, it gives you the little check boxes. You can do ES and NQ combined. You can combine the instruments in the market pulse.
Yeah, perfect.
Yeah, so I got OPI and VPI. So I figured, hey, when one of those is ticking off, that gives you a pretty good idea when something's moving.
Yeah, I like it. I mean, that's something that Crash, you'll be up next, and something that you continually repeat about confluence, and you know, these added confluence add to your conviction in the trade, and you know, so it looks crazy that you're getting in at the bottom of the range in here, and it went against you a little bit, but not much, and then it really had a nice move to the downside. So well done.
Yeah. So I guess to sum it up, I mean, that's just part of my criteria, and I have to deal with it. I mean, leaving some on the table because, I mean, because if I got a measured move into the high liquidity, that's about all I can see, right? I mean, how am I going to know it goes ahead another 10, 20 points, whatever?
Yeah, totally. But this is where, like, it depends on all sorts of other things, like, you know, is the bigger trend to the downside? Is the news bad? You know, we've had some really volatile days. This is where you can align your bigger picture trend along with, you know, potentially seeing a bigger move unfold. But again, this is it. Even like Robert Rother yesterday, six ticks on his stop loss, 12 on his take profit, 2 to 1. He doesn't care. He'll just take it again and again. All in, all out. Extremely simple. He doesn't have to worry about trade management much. So he's not trying to capture all these things. He doesn't even care. He's just on to the next one. You know, I wouldn't feel bad about that. But you know, play around with it in replay mode and trade it like, you know, we were showing this week. That might help. You look for something. There might be like a small little checklist in here in your trade management criteria of like, I'm going to hold it, you know, and you'll have to kind of, you know, find something in here.
Yeah. See, right there, you know, where you had circled, you know, I was like, I was still hearing the market pulse tick off, and I was like, you know, I was getting, that's why I wrote that there. I was kind of nervous. I was like shaking and stuff. I was like, oh man, do I exit now? Check, hold it. Oh, you know, I already reached my I guess kind of like Scott was saying, when he started to ignore the P&L, he said that's when it was started to take off, because I was looking at my P&L and I was like, oh, I already hit 225. I should just get out now, look for another one.
Yeah. Well,
You know,
okay, all of that stuff is for the future to consider. But looking here at this and what you have accomplished at this point is tremendous. So continue on and worry about all that kind of other stuff later.
yeah. I mean, it's off to a good start now. So I think I can do it. It might take me into a little bit into next month because of things.
Great. Well, congratulations.
All right, I'll let you go now. Thank you,
Okay.
Bruce and Stan.
Yeah, I actually had a bunch more in here for you, but maybe we can come back and revisit if you don't mind, and we'll get on to Crash. We've already gone half an hour.
Yeah,
So
just I didn't want to take up any more time was all.
okay. I would like to. I felt bad last time, so let's jump in with Crash here, and we can go through that, and then Valifan, and then maybe we can, and then Stan's gonna go.
Okay, thanks, guys.
All right. Yeah. Good job, Rob. So let's see here. Get Crash up. Are you there, Crash?
Yeah, hey. I was just waiting for you to start it.
How are you?
Good. How are you guys doing today?
Doing well. So I didn't really see, I know you said you've been busy, moving, etc. So I didn't see anything more to cover in here. So I just have stuff from last week.
Yeah, I apologize. I've been super busy trying to get my house sold here. So I've been busier than a one-legged man in a booty whipping contest, I feel like. So trying to get as much content as I can along with trading and my other job plus selling my house. So been a little bit on the lighter side of presenting material than I normally have in the past, but I'll get through it here in the next week or two. So
No worries. I mean, you have made up for it in the past. Let's go over this, because I did have some questions on this, like, looking at a lot of different things in here. And maybe I'll just let you walk us through it, I think. Start with that, because you're seeing something in here, and yeah, why don't you take control?
yeah, so I'm always trying to show just different things, so it's just not always the same picture all the time, same trade setup every time. And so I just try to find a variety of materials to present while still trying to emphasize my key points, and kind of like what you said at the beginning, confluence, in my opinion, helps build the confidence of taking a trade and or staying in a trade for a longer period of time to let it run. And so, obviously, I've shared in here, I've shared a little bit more, just a couple other pictures from my own personal charts that I use with Bookmap, because I get a lot of questions from people kind of asking me. So every now and then I just try to show something to highlight what I've talked about in the past. And I think it was a couple of weeks ago, we had just kind of mentioned some of the stuff that I was using with ATRs. And so I decided to kind of just show a couple pictures this last week of that. And so this is really a picture of my trading system. I have 4 components. I use a 10-4 Renko chart, which is what you see on the left. This is kind of my sniping version of kind of like what Scott Pulcini does. These are my ATRs. The chart on the right is a 1-minute chart. I have structural setups that come from this chart on the right, as well as the eye sniping. So both charts, the eye snipe is what I call it on the left, and the eye structure chart on the right, are both actually structural setups. But at the core, when I am doing an entry, I am always referencing Bookmap order flow. And for me personally, I love pretty much everything about Bookmap, but I always seem to come back to this checklist that I've built in here, and that is whether I am doing a reversal, which this happens to be, or the next picture you might have might be a continuation of actually this trade. I always look at Market Pulse VPI and and the CVD combination. And what I like to see, as I've talked about before, is I want to see sell sweeps into sell stops, preferably into a liquidity zone on heavy sell volume. And then I want to see that VPI spike bounce from there at that liquidity zone and be followed up with more aggressive buy volume, which you see right here in this example. And so this whole 3 chart system here is to show the confluence of how I get a very specific setup using Bookmap to confirm what my ideas are on my left and right charts. So for example, on the left, my ATRs are actually shifting. So if you look at the kind of the reds, purples, pinks, the lines all on the left-hand side of the screen, the browns, those are all bear ATRs. They're putting pressure down on the market as price is dropping, as you can see in the center picture on the Bookmap. And then they shift to bullish ATRs. No, use that same chart just for a second. You can see the red lines and the red background shift to a blue background, and then I start getting all the bull ATRs coming underneath me, building support. But in that green circle, in that transition, right, I have a time frame that I'm looking for a cycle rotation from a low to a high, and I can see the shifts in the ATRs happening, but when I look at Market Pulse VPI spike in the center there, I can actually see where I want to start my legging in process. And I think pretty much everybody in here has heard me say I like to test the market at the very lows that I can, where I feel there's a ton of confluence, because I don't personally, just my technique, I don't want to miss out on a 40-point impulse move up, let it consolidate, and then Wyckoff spring or break out of that consolidation pattern and then get into the entry. I know that's tends to be the safest route. I know that's what you preach a lot, Bruce. I just have my own rendition of it. And for me, Market Pulse VPI helps me to get in and catch those points. I mean, look at that low down there, 18,450. And where does the impulse move stop? That first, it's kind of vertical, right? It's a V-shaped recovery once we get that VPI spike, and it takes us all the way up to 573. So if I can use confluence to get down in there, 40, 50 points before somebody else does, I want to take a chance on doing that. And I use confluence, and the center part of all that confluence happens to be that checklist that you see right there. So the Market Pulse VPI spike. And then, of course, I have my ATRs, I have Fibos that I use, I have price targets, and I have my own cycle timing methodology. So that's the whole point of this, is showing how much confluence you can get with Bookmap with whatever other system that you end up using. And for me, the Market Pulse VPI is the amazing part of it. Now, I want to have a lot of confluence, right? I want to have, it's going to be a reversal pattern, because 90% of the time I want to go in the direction of the trend. But I do have some setups like this one, which I call a vertical DOS setup. That means deeply oversold. We're in a very deeply oversold pattern. I have some structural indicators that show me when I'm reaching that deeply oversold pattern. So then I look for that pattern at a timing cycle reversal, and then I want to have the VPI or all the Market Pulse tools help me pick the entry point. And that, for me, has produced amazing results over and over and over again. And that's why I'm always like, test it out, prove me wrong. Because when you have this kind of confluence and using Bookmap as the centerpiece, you can get some pretty amazing trades. Now, what you don't see in here is this is actually kind of an ABC pattern up. So this is the reversal portion, the beginning portion of this move. And I think on this one, I caught 2 100-point moves back to back. I posted some other pictures that went along with this. But the Market Pulse VPI, do you have the picture from inside the Bookmap Academy from the 31st by chance?
I have another one here. I don't know if this is it.
No,
or
it
I
was
have another
just a
one.
Bookmap picture by itself.
Okay.
But that's okay if you don't have it. It showed like just Bookmap and how I use VPI to catch swings in the market. This is a smaller version of it because you don't get to see the whole Bookmap picture because I'm laying it side by side. But if you were to take the Bookmap chart here, all right, and look at it just on its own, you would, and you saw these, 100-point swing down, 100-point swing up, you would actually see the highs and lows of the turns of the market with Market Pulse VPI co-joined next to the CVD lines. So the CVD lines co-joined with Market Pulse, if you put it like on an hour chart or at least a 15-minute chart, you can completely see where these swings occur in the market. So I would advise kind of scaling in and scaling out on time frames on Bookmap to be able to do it. I look at on a 1 hour block. So from one line to the next line, 10 o'clock to 11 o'clock, for example. I want to see an hour period of time and look at what the Market Pulse VPI spike looks like on that time frame versus a 15-minute window versus a 5-minute window. So I'm going back and forth all the time between a 1 hour, a 15, and a 5-minute. And the Market Pulse VPIs do look different in those different time frames. If I'm looking for a major swing reversal, I'm going to look at it from a 1 hour point of view first, and then I'm going to zoom into a 15 and a 5. I have a couple different charts up so I can see different time frames at the same time. So
Nice.
that's kind of how I use Market Pulse VPI to help me with the swings. But again, this one is a actual reversal. But if you went to the right in time, you would see an actual pullback of that ABC pattern or that consolidation period. And then we swing up again, I think, for another 100 points. So again, in that example, I was using Market Pulse VPI for the continuation of the move, not just the reversal of the move. So
Yeah.
for me, Market Pulse tools help with both trade entries and trade exits in both reversals or continuation trades.
Yeah. Nice. Nicely put. I've got a question on, are the stars here, are these your entries?
No. So everybody pretty much familiar with Bill Williams, right?
Yeah.
He designed the Bill Williams fractals and gators, right? So the green dots and the white dots that you see on this chart are Bill Williams fractals. And then the star is basically the same thing as a Bill Williams fractal, but it's more of an exhaustion point. So you can see down there at the bottom, I hit an exhaustion point with the Bill Williams fractal, and that's just one more tool of confluence of finding an edge, finding a high or a low.
Yeah. Yeah.
So
Nice.
down here, I have the Bill Williams fractal plus the star exhaustion that I have. I have Market Pulse VPI, have price targets, and we have Fibonacci levels all down in this area. So it's tons of confluence to pick a reversal. I would never want to catch a falling knife. And I actually think I have another picture. Maybe you already have it in here. But I say in one of these pictures, use Market Pulse VPI to help you not catch a falling knife or not catch a shooting star. Obviously, something that's skyrocketing like the NQ could do, because you never want to get eaten up, right? And that's what you always stress is, how do you not know it's going to continue to shoot down? If it's already shot down 50 points, how do you know it's not going to continue to shoot down another 50 right past that little minor liquidity zone? So I always say, learn to earn on the turn. And what I want to see is I want to see that bounce with volume. I want to see that VPI spike. And if I can see a VPI spike after a 50, 60, 70 point move down, that's a clue to me that I'm not catching a falling knife anymore. If anybody understands what the NYSE tick is, the tick symbol, right? Ticks basically give you kind of a spike down or a spike up, similar to what Market Pulse VPI does. But I think Market Pulse VPI is more specific than the tick. So if anybody is used to using the NYSE tick, try to compare that to using the Market Pulse VPI, or use them in connection with each other. So let's say you got a low tick of the morning at the same spot that you saw this Market Pulse VPI spike down. That's a massive point of confluence for a reversal at that location.
Yeah. Yeah. Nice. Nice. Really nice. Yeah. it scares me looking at it. But you know, you've got your reasons for it. I'm curious. I don't know if I asked this before. You know, you're in like 2 or 3 minis or micros down here, right?
Yep.
So I'm wondering, how often do you actually catch that compared to just getting just totally like annihilated?
Um, well, my system is back tested, the one on the left with those ATRs,
Mm-hmm.
and I have a 78% win rate on using my ATR system that you see on the left. So when I compare a VPI spike, what I really like to see is a VPI spike into one of my ATRs. So if
Okay.
I see that VPI, let's just say we were, you know, where that circle is, if that VPI spike actually occurred a little bit more to the right on one of the thicker lines, maybe that, you know, green or blue one down there, they're labeled on the right hand side. So if you follow the lines up, they say 6, 10, 15, 20 down the column.
Yeah.
Let's say that market pulse VPI spike occurred on that 20 line, right in the middle of it. That is a massive point of confluence for me where I have literally no more than a 3-point stop needed if that market pulse VPI occurs on an ATR like that.
Mm.
So it's a little bit situation dependent on where the ATRs are in relation to the VPI spike to answer that question. But, you know, in general, I can sit here and tell you all day long, I have like a 78% win rate day after day after day after day using this system.
Wow.
It can go up as high as 92%. I think there's another trader in here that uses my system that could probably testify to that. I think I saw him here. MW Trading. MW Trading is in here. He's used Scott Pulcini's ATR system, and he has used my ATR system. And so, you know, he could probably speak something to what he sees results at if he wants to type something in the chat room. But the point is that it has been back tested, and I do not get burned very often. And if I have the max stop I ever use is 12 points ever.
Okay.
So if I'm going in with 2 to 3 micros to test the water, right? Let's just use a round number of a 10-point stop. If I have one micro that moves 10 points, how much is that worth? Well, one micro at 1 point is $2, right? So if one micro goes against me 10 points, 10 times 2 is 20 bucks. If I have 3 on them, okay, then I risk 60 bucks max legging into this position where I might now carry it for 100 points. And so the reward far outweighs the risk.
Yeah. Yeah. I mean, I'm really curious about it because like you've honed this strategy now for some months, and are you getting to the point where you don't want to just like take a shot at it? It's like, no, I'm actually going to go in bigger at the very, very bottom.
Sometimes I do that.
Okay.
If I have a lot of confluence, all right, let's say I have, do you have any other pictures in here? Let me see what your other pictures are that you have.
Sure.
Maybe another picture shows some of the other confluences I have. I don't remember what all you had in here. No, that doesn't have any of the big confluences. What's the other one you have? I'm just trying to see if there's something that shows a little more. Okay, look, see how that,
This one?
look at this picture on the left. Okay, this is the example I was talking about. See, I have that big 20 line right there.
Yeah.
Okay, and then I have that spike with a Bill Williams fractal that occurs right on it. And if you look to the right, that circle right there matches with the double bottom that you see on the Bookmap picture. So if you scroll just a little bit more to the left, so we can see the whole picture on the left as well. Nope.
This one or
no, yeah, like that right there. We'll use this side, then we'll look at the other side. I have a double bottom on the left, both circles. Okay, on the sniping chart that I use, where the price is coming down and bouncing off that ATR 20 line. Now, I said I like to learn to earn on the turn. So I am not, if price was going to keep shooting through that liquidity zone that you see on Bookmap there, where the 2 circles are. So we're comparing both circles on Bookmap to both circles on the left on the ice snipe chart. I say learn to earn on the turn. So when on Bookmap, I see price doing that sell sweeps into sell stops into that liquidity zone. And then what happens is that buy volume comes right back in. So for example, that far left-hand turn, price is coming down to that 20 ATR. I see the price starting to bounce. And what happens is on a 10-4 Renko chart is that Renko bar, when the second Renko bar that's bouncing off of the 20 line closes, that's when you get the Bill Williams fractal. So I don't take that trade actually until I see the bounce occur on that volume that comes in. So when the Bill Williams fractal appears, I've already gotten two small flex Renko candles to close, bouncing in the upward direction. And as soon as I see that, that's when I go buy. So now I'm not really catching a falling knife because price has already started to bounce. I get confirmation from the Bill Williams fractal, which matches up with the VPI spike and the sell sweeps into the sell stops. So it all builds confluence together. So I'm actually not catching something that's slicing through a level. I'm waiting for the price just to start to bounce when I see the spikes and the Bill Williams fractals occur on top of the 20 line. If I see that 20 line, which is my major support line out of that whole chart that I do, instead of doing 2 to 3 micros, I might put on 3 to 6 minis because I'm that confident in the system and the bounce that I'm going to see with that combination of the VPI spike off of one of my support zones. I got liquidity and I got an ATR all in the exact location. I have a double bottom. You could also look at this as if you don't want to catch the first market pulse VPI spike. Fine. Let's just do a little technical analysis here. From a technical analysis point of view, let's say you don't want to buy the first one. Don't buy it. What do we see down here? Well, we see you could draw a rectangle from one circle to the other, up to the pink line to the green line, and you can call that a consolidation zone, right? Yeah, just like that. So if we're looking in that rectangle area, you could actually draw it up a little higher to where you see the VWAP line if you wanted to, depending on how conservative people want to be. But if you just drew that, big picture wise, you're looking at a W, right? And as the price bounces above the VWAP line there, you're actually seeing a Wyckoff spring bounce out of that rectangle. And you're getting all kinds of technical analysis confirmation here. You're getting a double bottom with a right-sided pivot rule, which means that the right side double bottom is higher than the left side. If you study W pattern formations in candles, you know that sometimes the right side of the W is perfectly equal in a double bottom. Sometimes that right side is slightly higher, and that's the one I prefer. So this is an example of a W formation with the right-sided pivot rule, where the right end of bottom of the W is higher than the left side. This is both occurring on top of liquidity with a double VPI spike on top of these zones. So I can either choose to, if I want to, take the first touch of that 20 line and leg in with 3 micros on that first VPI spike. Or if I want to be conservative, I wait for the second spike because I know a lot of times you can get 2 spikes in a row. I also know that off of my ATR zones, that many times I get what I call a double touch rule. We know it bounces up, comes into a consolidation period, bounces down, hits the bottom of that rectangle, and then finishes its impulse move out the top, which is what you see there, right? You spring up to the top of the rectangle, consolidate there at VWAP, and then we have the continuation of the move outside of that Wyckoff spring up.
Right.
So a bunch of technical analysis all rolled into this one picture. A lot of different ways to look at it. So depending on what I see, depends on how much I enter in. If I'm going to play the very first market pulse DPI spike on the left, I'm probably going to do less a fewer, smaller lot of micros to leg in. I may keep a core position because I like to get 100-point trades if I can. So let's say I did 10 micros off of this. I do a mini VWAP mean reversion back up to VWAP, right? Maybe I leg out of 8 of my micros. I let it pull back again to the bottom part of that liquidity zone. I see that second VPI spike, that second touch of the ATR with a right-sided pivot rule. Now I might go 3 minis or 20 micros right there.
Yeah. Yeah. Nice. Nice. All right. Yeah. Sounds great. Well, yeah. I mean, I don't have any questions. I don't know, Stan, if you have anything that you wanted to cover.
Well, that's perfect. That's great explanations. Really, great job.
You know, and if
Okay,
you want to, thanks.
seems you.
And for anybody who doesn't want to take this risk, right? Just looking at Bookmap alone, you can see the W formation there below VWAP. You can see that we bounce off the liquidity zone. We come up to VWAP, and then what do we finally do? We have a breakout, right? So you could potentially add or just initially leg in at that breakout finally above VWAP, or you can wait for, now what you like to teach is that first impulse move out of that consolidation period. Now let it pull back, find that first pullback, and then buy from there. So there's a lot of different ways to tackle this formation from a technical analysis perspective on where to get in on that chart.
Yeah. Yeah. Great stuff, Crash. So, yeah, I don't know. Let's see if there's any other comments in here. No, not too much. The let's see. I did have a question. I wonder, like, after your military experience, do you find yourself talking a lot in using acronyms and learn to turn to burn or earn?
Yeah. Well, you know where I actually learn to earn on the turn. So a lot of you guys are probably too young for this. There was an old guy that used to teach options trading and futures. His name was Wade Cook. I don't know if any of you guys have been around. That was a long time ago. I went to a Wade Cook seminar like 25 years ago, maybe. And I actually learned that turn from him. I didn't learn it in the military.
Funny.
He was a big proponent of not catching a falling knife or a shooting star. So he said, listen, don't pick bottoms. Don't pick bottoms. Why get crushed on a bottom? So he coined this term, and I teach it now myself. Learn to earn on the turn. But I can pick, the very beginning of the learn to earn on the turn, right? I just explained to you how I do that. So I actually let price bounce just a little bit off of confirmation points that I have using the checklist that I have with Bookmap. And then I hop in as soon as that confirmation shows me that I have learned to earn on the turn. So now I am ensuring that I only need a 3 to 5 point stop max on an NQ that's now going to go jump up 10, 15, 20, 30, 40, 50, 60 points. So I'm learning to earn on the turn, and that prevents me from catching a falling knife. So the images may appear like, gosh, it might just go slicing through here, but it doesn't, because if it's going to keep slicing through there, first of all, just look at this picture on that you have here on the left. Okay. Let's say, for example, the purple line. See where I'm bouncing up from the pink to the purple? Right there where your cursor is. Now go up one line. Yep. Now look at price shooting through. We've just done a breakout from that W formation. Okay. We're having our first impulse move breakout. Price is slicing through my ATR there. Now, what if I said, well, I want to short that purple line because I see it bouncing off, hitting an ATR? Well, first of all, I'm just coming off a double bottom, so I'm not going to do it. But the point is that if I saw price sliding through my ATR and there's a liquidity zone there on Bookmap, I have no interest in getting in there because it did not start to bounce and create a fractal on that line. And that's how I'm able to keep such a tight stop. So even if I said to myself, yeah, I want to sell that purple resistance line above, if I don't see it bounce down and have a Bill Williams fractal on that purple line with a liquidity zone there on Bookmap, I'm not selling it. So the same thing applies to the bottom. If it was going to continue to slice down through it, I would wait to see a bounce and a Bill Williams fractal to develop to confirm that the turn has actually occurred.
Yeah.
But it is so precise that price on that green line is what, 18,624? I can get in at 18,626.27 and be very confident that I'm not going to get destroyed with it slicing down anymore.
Yeah. 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 All right. All right. Confluence.
Yep.
Excellent. Excellent. Thank you, Crash.
Yep.
So
Thanks, guys.
let's see. If there's no more comments or questions, then it's already been an hour. So and we have Valley Fan and then Stan's stuff to go through as well. So let's jump over to Valley Fan first off, congratulations are in order to him. I don't know if you guys saw this, but in the academy there, he is now certified. He's passed his funded trader, and way to go, man. Good job. So I know you posted it in there in the academy, so I thought it'd be okay to show it in here. I hope that's okay. And then Valley Fan will open the mic for you. This is what I had here, and this was from actually last week, but it was a good one, and it was your kind of foray into the futures. So I thought maybe we'd cover it. Looks like he's still got some mic issues.
Incoming, I guess.
Okay. Anyway, a nice read. I mean, super simple and clear. I like it. As this moves down into what? Just huge liquidity. Yeah, it's he's coming from the stock world, and then now looking at and the liquidity and the behavior is different. I mean, order flow is order flow. All in all, but it's the futures are a little bit different in the way that it trades. Anyway, yeah, now we can hear you now. Excellent. So congratulations first off.
Oh, thank you.
Yeah, and then why don't you walk us through this one here?
This is just a trade I had off of R4 up there. Got a really nice rejection. Some anomalies. Yeah, right there at the top in the pink. And it was a great setup. Got the candles I wanted, so I went short. And you can see to the right where I went in, the pink arrow. Lower, up higher by the yellow line.
Oh, here. You got up here. Wow.
Yeah, beautiful. On the new 1 minute low.
Wow.
And it's just this wall just started to show up on the book. And I've seen it a few times on some other stocks and on the futures. Sometimes this is you shall not pass kind of wall, but on this day, it just went right through it. It didn't have any problem eating all this liquidity and to continue higher or continue lower. It was just interesting. I got a recording of it. We were watching it, and it's like, that was pretty incredible. There's so much liquidity, and it just went right through it.
Yeah. Beautiful. I mean, beautiful setup, and I would like to see it over here in Bookmap, but I can just imagine what this looks like. Here's your spike above here, right? Rejection. Here's your candle close, and this is your entry right here, right?
Yeah.
Beautiful. Because you wait for the candle to close. It's only 1 minute, but hey, it did it. It rejected. It's back in, and then you probably see, I don't know, maybe a little sell volume in there, but it probably really starts to pick up in here. I would imagine. And then it just craters. It
just has so much momentum.
Yeah.
Even something like that wasn't able to stop it, and just went right through and kept going lower.
Yeah. I mean, this was a kind of an odd week. I mean, we had so much data, and the market's been this was the week before. That's right. But yeah. I mean, we've had some wild swings in some of these areas. So like down in here, that's why we always kind of go through it about the context. So if there's, it doesn't matter if there, if there's more supply by the sellers in here, hitting into this liquidity, doesn't matter how big this is, it'll trade through it, and that's the dynamic, and that's why a lot of times we actually see, that a lot of times, especially like in the NASDAQ, it'll trade through it, and then there's just nothing more. I mean, so there was a little more supply than there was liquidity. It trades through it, and then it just rejects and comes back up and above that liquidity, and then you can look for the potential reversal to maybe unfold. Yeah. So okay, was there anything more to this one, Valley Fan, that you wanted to mention?
Oh, no, it was just interesting to watch it come on the book and then not hold.
Yeah.
Oh, really?
So
It gets the one test, and then that second test, it's just right through.
Yeah, I mean, it looks like you did a bunch of things in here trading wise. So first off, really pretty entry here, but yeah, I have some questions on this. So here's your entry, fantastic. So your first scale is I don't know, someplace in here, maybe here. Your second one is here.
I think that was a 2 to 1, and then
Okay.
ready for the brace to low a day.
And then you sold again here is what it looks like.
I don't know if that was because it came up and it was making a new 1 minute high. I just wanted to reduce my size. I can't actually remember on that one.
Okay. Yeah, that's just,
I had added earlier, and I think I probably reduced as I thought it might come back up to that area where I had added before. And then if it held there and went higher, I would have been out.
yeah. Well, you nailed that one too. Yeah, really, really nice stuff. Stan, any questions?
So I'm wondering, did you enter due to the rejection?
That was an ad, actually. I'm sorry. That was an ad instead of a scale.
I
there.
I mean for
The
the
pinks are
entry.
shorts.
Yeah, here's your ad, right?
That's the ad instead of a partial. Yeah, the blue, the cyan colors are the partial.
These were your covers, yeah.
Yeah.
I wish Ninja Trader made it bigger.
I was speaking about the entry. So I don't know if you enter due to the rejection above the previous high.
It had rejected before those 2 1 minute candles that put in. So I was just waiting for another test because there was liquidity there. And it really came back up to it and tested it, rejected, tried to pierce through it, rejected. And so I was just ready for a new 1 minute low or some heavy selling come in to get short. That's all I was waiting for because I had my stop then at the top of the candle.
I think it might be a good idea to note about how many points or ticks it goes above the previous high and then reject it.
Okay.
To maybe give you more confidence in there. Plus,
Okay.
obviously the order flow. But maybe, yeah, just the fact that I've been working a bit on it.
It's a really good point. I mean, and then that's where you start to get into your more nuanced studies about, like, typically S&P. Well, it depends on the volatility, but like 2 to 3 points maybe, and then failure. A NASDAQ always kind of skids through a little bit more. And then just totally fails. But it's a good point to, like, maybe on down the road to look at that, like, what are the sizes of these wicks? It going above an area by how much? So you can really start to nuance. This is what Robert Rother had talked about too yesterday, about, like, yeah, I'll then move it from 5 ticks to 6 ticks, and you know, he'll adjust it a little bit, and then, you know, if he was taking 5 ticks, he'd had 10 ticks on take profit, but if it's 6, then he's looking for 12. So yeah, it's a good point, Stan.
Yeah, no, thank you.
But yeah, that's a good catch. Really, yeah.
Because I'm always looking at the wicks, you know, on candles, especially around areas that I'm interested. What do they look like? You know, what's being presented.
Yeah.
So like long wicks, when I'm looking to short, you know, long topping wicks, I really like those tweezers, things like that I like to look for.
Yeah, but obviously it will be good to have a picture with Bookmap about the entry to add in confluence the order flow. If you had liquidity, if potentially you have your VPI spike into high liquidity above the previous high, but it would be just good to have a Bookmap picture.
And then I just love to see the absorption at the levels that I like to trade too. That's really what I'm looking for. To let me know, okay, somebody is there. So I've got some protection.
Yeah, I agree with Stan on this, like in those things that you just mentioned, like, you know, looking at absorption or whatever. Well, I mean, this isn't showing it. So maybe, I mean, if you have your kind of wicks and understanding in your studies there, now how can you gain something deeper through the order flow in Bookmap? You know, you can look for those things, like maybe it's a stop run up above here. Total failure comes right back down below. Once you see that sell volume just below it here, look out. You know, it's likely going to go. But putting those kind of details together, at least I have found that extremely helpful by understanding what this looks like in Bookmap.
I'm sure I probably got a good video of it too. I don't know if I recorded that entry or not.
Yeah,
Recorded quite
actually,
a few.
you may have it. In fact, hold on.
That one was the
This
video
was
of
this.
going right through that liquidity.
Yeah. Okay. So yeah, we do have video of that, but well, anyway, yeah, I don't know. It would be more helpful for us to give you, I think, better feedback if you could show this as well in Bookmap.
Yeah, I record most of my entries and or through I go out the day. It's easier for me to go back and look at things if it's on a recording and I can take notes then.
Okay. Also, replay mode. You know.
Yeah. Oh yeah. Yeah, I didn't think about that. Yeah.
So and then also trading, like since you're doing your trading here in Ninja, consider doing some of the trading in Bookmap in replay mode, so that we can. I mean, it doesn't have to be, you know, exactly how it happened. In fact, it might be kind of even more interesting to see if, like, maybe you got deeper insight. Maybe you would have gotten in up here. Maybe you would have gotten out down here where the buyers came in. You know, some just details in there. Maybe trading from the Bookmap chart will enhance that in replay mode, and then compare. So this is what you actually did, and then this is what you did in Bookmap. Just a thought, just some ideas.
Thank you.
Yeah, sure. So Stan, anything else that you wanted to go through?
Yeah, just say like I think it's where Bookmap can be a powerful tool. It's by adding a piece of the puzzle by looking at the timing to get it in there. Even
Yeah.
if you nail it, maybe you had better. You might have more conviction with Bookmap just by looking at the other floor in there too.
Yes. That Bookmap is, you know, central in my strategy and how I trade. Looking for entries, I take so much off of it.
That's great. I mean, because look at down here, you know, you don't see anything, right? And then look at here,
Mhm.
you know, and it's okay. So it went right through it. That doesn't matter. you still know, like, this could be, it probably, I'll bet, like, it might have blazed through it, but I bet it probably retested back to it because of all that liquidity in here. Might not have, but like a lot of times that does happen because these areas in here are significant. It just adds so much more detail and understanding of actually what's going on here. Like just in this example with the liquidity. So that's my only comment.
Thank you.
So let's see here.
It was just an interesting day, though, on MES. This was before it started. Everything started to take off to all-time highs. It's just like, how low is it going to go? What's going to catch it right now?
Yeah. It's been some crazy. There were some days last week that I didn't mention it last week, but I was going to say, guys, I don't know how you're doing this week, but I'm not doing so well. I was struggling a bit because like I'd see a beautiful order flow setup and it would just blaze through it, just like you're saying. And I'd get hooked into it and then it would go against me. And the way that actually I found, this was like, your higher time frame, you get these here. Let's just go here. Your higher time frame, like it was this area in here, right, on your daily chart here. And when you get into these kinds of all-time highs or pretty close to it, and you get this kind of repositioning, I think it's larger players, and we have a lot of data as well, and we get these big swings in here. So I'm looking for these little smaller trades in here, and then getting knocked out, where I'm sorry, smaller trades on a much smaller time frame, but you get my point. But what helps is then just widen it out. Okay, I'm not looking at these little small swings now. I'm looking at these swings, and then just zoom out. For example, Alan's not in here, but like for the crypto competition, you have to trade that way because of the spreads and the commissions. Not the spreads, but the commissions. That scalping tool is gone because you have to get like $100 in your direction just to be at break even. Anyway, just that was during those volatile times or those bigger swings. That's what had helped me. So here's another one, Valley fan, and I don't know if you want any kind of comments on this one here.
It came really hard down, just a beautiful pattern right into S3 where I look to get long entries, look for buying, hit the level on the nose, great absorption, and came back up, made a new 1 minute high, I think. And I got in there and came back, tested a little, but then went right back up to the orders there on the book.
Yeah.
That's what I love to see right here.
Yeah, it's great. It's great stuff. I mean, you can see some in here as well, but you really see it in here. So that's where you took your profit, was up in this area in here.
Probably took some partial there, yeah, but
Yeah.
I was much higher. I think I was up around the 18,750 as my final target.
Oh, nice. So you got it way up here.
Yeah, that's where I was looking to go. I can't remember where R3 was, but that was my target. But
yeah, beautiful. So from S3 to R3, wow. Beauty. Is that right?
Yeah, that would be the S3 to R3 play.
Wow.
Looking for at least a 4-to-1.
Wow.
On that.
That's a huge move. Yeah, that's 750, and then what is this down here? 650 is here, 750 is up here. So there's your 100 points right there. Yeah, beautiful stuff. I would say same comment in here, that it would be, I understand what you're looking for, and I got your entry. I think just zoomed out a little bit more, give me a little more context to be able to maybe say, give you some more feedback.
I have found it's more difficult for me to try to read and find the liquidity on futures versus stocks. On stocks, it just seems like right there. On futures, sometimes it just seems to hard to find what I really want to see.
Yeah, they trade differently. And you know, if like here in oh my God, look at that, NVIDIA. Wow. Um, but you know, in the stocks, yeah, I totally agree. You know, larger players are at these big figures for the most part, and they're just waiting. And if you want to trade with them, that's where they are. But yeah, in futures, it's a different thing. I mean, they'll be at the big figures too, but you know, they're hedging. There's other people doing different things. So
Just all the algo activity sometimes around futures, and I'm looking in there. I like to see stacking with my position. Like if I get in for reversal, I want to see if there's liquidity building underneath for anything
yeah,
to fall back. Just hard to see that on futures.
yeah, yeah. Yeah, I mean, you get a feel for it. I mean, the Nasdaq futures are more difficult these days. You know, like Stan recommends and others, I recommend looking at the TraderMap Pro for a filter. It works really well for Nasdaq, really well. You'll get a different perspective.
Okay.
Yeah. So maybe give that a shot. So
Okay.
I don't know. Anything else, Stan or Valley fan that you want to mention?
Is it the
No,
time
just thank you
for
guys for everything you do.
like
Appreciate it.
Stan?
yeah, I had just a question. Is it just the time above, or is the timer when you are entering in the trade, or
The clock, it's just the market time.
okay,
I live in Colorado, so I
all
have it up
right,
there so I keep track of market time.
all right, perfect.
Yeah. Yeah. Okay. Yep. Yep. Well, congratulations again, Valley fan. And then Stan, let's move on to yours. And I'm sorry to we needed to go over those guys though. It had been a while, and they've been in here every week with great content. So thank you guys. And let's get Stan's up. Okay.
So yeah, perfect. We'll start with Steven. So he made some content for the crypto competition. I don't know if he's here.
Yeah. Yeah. He's here.
So he was like looking for a flag pattern, and so that's great to see like what he was looking for. So the notes that he made before, uh, the zoomed view, a bit of context, and I was just wondering about the entry, if it was a bit of FOMO or if you enter.
Wait, is this the right one, or it might be another
Uh,
image that you're talking about?
Hi guys. That's the ES.
yeah, I think I
That's
said
the ES
the wrong
trade
one.
there from
Yeah,
Monday. But I did post twice. I did the ES and I did BTC comp one.
yeah,
as well.
exactly. I think it's the wrong picture.
I think I know exactly what you mean, though.
Yeah.
In fact, we put it on our insights page here, so it might be this one.
Exactly. Yeah, exactly. That's that one.
Yeah.
So
Oh yeah.
yeah, so he was looking for the flag pattern, and when I look at the entry, it seems like you enter completely against the order flow at the time. So I don't know if it was part of your plan, if it was because it's Bitcoin and you try to catch like the the move when they try to test the bias. But it's true. Then we had like real liquidity against you and not a lot of buyers who try to catch it. So I was wondering if there were not a bit of FOMO. Like if we are looking just about the pattern that you were looking for, then you put on the left, on the top left, like yeah, you clearly, as you mentioned, no liquidity on the bid to support you, and even like not biased to give you the confidence. And yeah, like even the liquidity on the offer haven't pulled at that time, or yeah, above, but yeah, clearly,
Right
but
here.
it's lower. Yeah,
Yeah,
exactly.
yeah.
So I don't know if you have anything to say.
Yeah, sure. I see your point. I did review the stream that Bruce brought up, and you know, he's reviewing this as well. And I do see that I got in with a limit order. I was kind of legging in. I was, you could say, a bit of like FOMO. I can see that view, but I was like kind of also hedging my bet. Like I could see, you know, the liquidity on the offer. If you look in that purple rectangle, I was like kind of thinking that would be a spoof or something. And yeah, the buyers ended up taking it on and traded right through it. So it played in my favor, but I do see that I might have gotten in a bit premature. I could have waited for the buyers to come in, and I totally see that, because it
Say,
did come again. From our forex days, we used to have this entry technique where they would call it a 2618. It's a double top, I mean a double bottom in this case, a breakout, which is that where you see the buyers coming in, and then it comes back to retest, and the 2618 is the 618 retracement. So that's where that got that name. So this is similar. Well, in this case, this one might be a kiss of death. So it comes one last time to try and take the buy stops out, and it doesn't, it fails, and then the buyers step in. But yeah, this one played out nicely, and I know it's Bruce's favorite setup. Well, it's one that he you know, he taught us, and I thought I'd share that. And he also caught the same thing.
Yeah, that was the interesting thing.
Yeah.
But Stan, any other comments? Then I'll mention that.
I
no,
totally
no,
agree.
yeah,
Totally agree.
that's. But overall, yeah, you catch the move on. Yeah, just it seems yeah, a bit weird for me. Like when I look at the pattern that you were looking
Mm.
for on the top, and then the entry and how you catch it. But still, yeah, it plays.
Yeah, no, thanks. I totally see it in hindsight as well, because I marked it there. I wish it had a bit more liquidity on the bid. Would have helped.
Yeah, yeah. I mean, I think I remember this in the webinar, and we were waiting to see what happened here, and then it was like we're waiting. Okay, buyers, we found them. Now what? Do we still get buyers above it? We're started to, and then that's where we got in, with someplace in here, and it immediately went against us.
Yeah, that's what I'm afraid of, Bruce.
Yeah.
That's why, like, I knew it was going to retest, so I was like, okay, hopefully this is the range. But I understand it is a bit aggressive.
Yeah, I actually
Could have
really,
worked and it could have not worked.
really like it, but I think it's a good point though what Stan brought up
Mm.
about this liquidity here. We don't. Is it kind of a bit of a spoof, or you know, do we have this really you know, clear? And I mean, there's a little bit of liquidity here, you know, underneath in this area here, but it's not a whole lot. But I actually, you know, commended you on this one. I really liked it because here's your impulse move. You know that they're in control. The buyers are in control up to this point here, right? So you're getting in on this kind of pullback-ish area. You're maybe looking for some exhaustion. one caveat here is that this liquidity, like Stan mentioned, but you're nailing it. I mean, you couldn't have gotten a better entry on
Yeah.
the, you know, it's a beautiful entry. And then yeah, so we took it in here, and then we're kind of shaking in our boots up here a little bit, just going, okay, what's it going to do? Like, there's exhaustion kind of on both sides. Then this happened, and they're pulled, and then I think I don't know if we added in, or I can't recall, but like then we were looking for it to move at that point, and then so yeah, I do remember this now, because we got out at, this is what we did. We had our target on the measured move. I think it was up here, and because it was like compared to this up here. Yeah, I think that was it. Just front running that 800, and then we saw them coming up toward it, and we're like, like if we're not seeing like this necessarily slow this down. So you have 69,920 here. We went up and front ran the liquidity in front of 70,000, I think, something like that. I can't recall what it was.
It actually hit 70K. There was a nice line of liquidity. I don't know if there's a second slide. If you have the second slide, you'll see it.
Yeah, the second should be.
I don't. This was from our insights page.
You mean like the dezoomed view?
Yeah, of the
Yeah, it
the
should be on
exit.
my Notion.
Okay.
I can send it to you if you want.
Stan
my
says
side.
he's got it here. No, is it
No,
this
no,
one?
no.
This one or this one?
That's the ES. That's the ES.
Yeah.
That's also worth looking at. It's quite an interesting setup. I can send it to you quickly.
Okay.
Just find the chat.
I'm not sure it's the good Notion link.
Okay.
So I selected the right one.
But whatever it was,
Okay.
I don't see it
Then
in this one where we during the webinar, during the live webinar, there was a big spike. I can't recall where it was. Maybe this was it, but I thought it was way
it was more
more.
towards the end, I think. The one you're talking of. I'm not too sure, but I put the slide in the chat. You can
Okay.
pull it up.
Okay. Let's see.
On the stream chat.
Okay. Yeah, here we go. Yeah, this was it.
One.
Yeah, this is where we got out, I think, up in here. Yeah. Yeah, exactly.
And it went higher.
And it went higher than this too. That's right.
Yeah.
I
was slapping my knee. I was like, no.
No, but then it went lower though, I think, after, right? I mean that I think
that's some profit taking.
Yeah. But really nice trade, Stephen. Nice setup. You had your criteria in there. You had kind of nuanced it with getting maybe a little more aggressive with that pullback.
Yeah, definitely.
But that's okay. I mean, if your assumption was like, they're going to pull that liquidity, then maybe you have your reasons for it. You've seen it. You know these markets. There's no you can. I think that's totally justified. To trade it that way. I was anticipating a spoof.
I also think it's great to like question me, just to see, and then it also makes me check myself as well. But I totally get why it was brought up.
Yeah, good stuff. I mean, really, couldn't have gotten a better entry. Yeah, in fact, I've been thinking of like, it goes against the criteria in the setup, but I've been thinking of kind of maybe adopting some of that more aggressive move on the pullback, because like it does make sense to me, at least. Like, this is where the buyers are in control, so I'm looking for anything in here. I know the flag pattern, we want to really nail it. We know that the pullback's going to be shallow, like less than half of this impulse move. This is more, right? but still, you are this is where the buyers are in control. So it is definitely lower volume on the pullback. And look at the volume, especially down here where you got in. There's a lot of great things kind of going on here, just minus that liquidity is pretty much it.
Yeah. And we maybe don't have the sharp move on the right, but the liquidity was there and the volume too.
Yeah.
So maybe that would be a good flag button too.
Yeah. You mean
On the right, just below, there where you are.
on this one?
So yeah, actually, no, just the previous one. And yeah, so exactly where you are. Yeah, we
Okay.
can see like this liquidity. We don't have really a sharp move as we get previously, but still we get like some buyers are taking liquidity. Then you have your pullback, and now if we get some buyers, we might expect a flag button.
Yeah, absolutely, Stan. Good catch. I mean, here's your book flip, right? From offer to bid.
Yeah.
And up. Some good stuff in there that helps confirm the continuation pattern. Yeah, nicely done, Stephen.
Thank you.
Let's see. Back to hold on. Do you want to go over this one?
No, this is perfect. That was another one. I'm not sure.
This one?
Well, yeah, we can go
It's
over.
the ES from Monday.
Which one do you prefer to start with?
I don't know. It just like I made the description like for the crypto competition. Just the images are different.
Yeah.
I didn't post the right one, but still, yeah. Overall, in this one, the first one, then you were just
this one.
Yeah.
Oh, did you have the wrong pictures in there?
Yeah, exactly. But yeah, but never mind. For example, over here, I found really great like the comparison. Like we can see that transact into liquidity plus you have the liquidity on the bids, your relative volume, and then your entry.
Yeah.
Even
Also
if
a bit
it
aggressive on the entry on this one, if I may say.
A bit, but still, you were trying to enter with those buyers. Overall, it went against you. I don't know if in this
A little
case
bit.
you have a stop or it
3
depends
point
about
stop.
the other flow. Always
3 point
point
stop.
stop.
Are still in.
Yeah, perfect. So yeah, overall, you have it.
But if you look there on the top left, the blue zoomed in block, that's my micro fractals, of the price action, which you can't really see in this zoomed out one, the bigger one. And you can see why I got in there. So it's like a bit of a double bottom break, retest, higher low, and then break. And then I got in just before the break above of the VPOC.
So right in
and then
here.
obviously it came one last time to test, like, do we have the sellers? And then we got absorption on the bid
down here.
And then again, you see a series of higher lows, higher highs, and it played out quite nicely. Can't remember the context now. It's tricky. I have to like have my NinjaTrader with the higher time frame, and then I can kind of tell.
Maybe if we go in the other
but
picture.
there's my notes there. It opened lower in range. Oh, okay, I remember now. It struggled to break below overnight low and yesterday's low. So I was kind of using that as my consensus or, idea. Like, all right, it looks like there's not going to be enough sellers, or the sellers will become the fuel. And in this case, they did become the fuel. And if you go to the next slide, you'll see I rode this thing up. It was actually a nice trade. I haven't done much trading this week because Monday was the only day I traded, and then Tuesday I had emergency fires that I had to go and put out. I was like very distracted, so I had to make a call. Do I trade or do I pass? And I had to pass because I wasn't completely there and my phone ringing, and I'm sure everyone knows trading, you need to be focused.
Yeah.
Yeah.
But this was a good example, and I also posted two separate slides for Bookmap Academy on Monday. So it was a very productive Monday.
Great.
Oh, one more thing to mention. I was trying to ride my target fall, but then I got taken out and then missed the move. So if you zoom in on the top left there, you'll see. There's like a faint red line. That's like how I was trailing my stop. So it just ticked me, and then it went.
Yeah, I see it.
I thought I had the lowest structure, but the sellers came in and took me out. Yeah. But overall, I think I was quite happy with this. I was also patient.
Yeah, that's a good one.
So, and then here you've got it over here. This is where your teeth.
Yeah, just trying to give it an idea. I'm gonna have trading off the Bookmap set up soon. The following month.
Nice. There's a couple of things really nice. Again, there's actually, God, it's so easy to sit back and critique and suggest or comment. So please don't be offended. But you've got it here, which is great on the delta and understand. So what I really like about the delta bars in here is that it shows you very clearly in the bar form the visualization, whereas here it shows it also very nicely in Bookmap, but it's a little bit spread out on the vertical, so the combination of both this and this here, I think, gives a lot. And I think you did the right thing. Like you started to see these buyers come in. You were just a little early. It did one more here, and it failed to get back up above here. You don't know that though until it's back down, really. But one more hit and one more high area of liquidity, and then it does something in here. This starts to look, in hindsight, this looks pretty easy. That this is where you're kind of looking for this to start to break, because you do see that transition from sellers to buyers. Now this happens at the cash open, so it's kind of hard, but it's actually not bad in essence, because you'll see this in the cash open all the time, or at least I see it frequently. Is you get this move going the wrong way, and then and then it grinds the rest of or several hours potentially to the upside. So you were right on top of that, a little early, and you had to take the heat, but looking for that transition to take place, and I think it does here. You've got all of this volume going, and that transition to sweep to the upside. That was one comment. The other comment was on this one here. It kind of reminds me of a donkey face a bit, where he's actually taking something kind of similar. Is Anchit strategy. It's like over here on the candles, it breaks this, and then he's getting out up here, you see it in the here. Let's just go back to the previous one. Hold on. You can actually see it in here too. Here's your break, and then here's the move back up, and then you could take your possible target up here. What we had talked about during his webinar, remember, and this reminds me of it, is that so you're trading this and you're taking your money, but it turns into such a bigger move, so once you kind of caught it, I really like that you held this and stayed with it. Is really great.
I'm a bit greedy.
Well, I would like to say you were patient, but
yeah.
I'm sorry, I interrupted you.
No, my mindset is process over outcome. So I'm trying to figure out how to trade, well, the thing is, if you take targets too quickly, and then later when you do a review, or if you obviously you'll look at it later, and you'll be like, wow, it actually went further. And then that is why I go for these further targets. But yes, I am patient, and sometimes it turns against me, but it doesn't matter because I'm learning from even the ones that don't work out. I'm still learning like how to manage it better, or okay, where could I got out? But yeah, I agree.
Well, that's yeah, I mean, we're coming up on almost 2 hours. I would like to actually, open that up for a bigger discussion maybe another time, because it's a really big one and a really important one. You can see Rob earlier today was talking about it like he's kicking himself, or Donkey, he doesn't kick himself at all, like no pun intended, but like he's taking this, he's getting out here, he doesn't want to take heat, and he's on to the next one, just like Robert Rother as well. I'm on to the next one. Now here, you are more patient with this, and you're looking for your process, so you're waiting for this to maybe do something bigger, and you certainly grabbed it here. So
it still went higher, by the way.
nice.
I got stopped and then it went higher.
Yeah.
But that's how it is. One more point just to add quickly. What I heard Donkey also say, he gets in, and if it doesn't react in with, I can't remember what time frame, but like it was something quite short, like 5 or 10 minutes, then he gets out because he wants it to work immediately.
Yeah.
But I can't remember exactly what he said. That was quite interesting, because I can see why he's saying it, because he wants to control his risk. But like for me, I've had it as well, where I'll like, it's not gonna go, and I'll get out, and then it goes. It's just amazing, and I know a lot of people can relate.
But I think maybe just try to track the time when it goes in your side, when it goes against you with a defined target, and I think you will obviously see interesting things. And as Bruce mentioned, when he's trading, like if it doesn't go in your favor, if you see something going against you really big, just cut. Don't let it go into your stop too. So if it directly goes in your side, it might be a good one.
Yeah.
I think maybe we can do a separate event, Stephen, because like it's rare that that a lot of traders will allow themselves this time to let it develop. I don't a lot of times. Like I don't know this is going to happen here. I take what it gives me. Like here, I know here's the figure. There's liquidity there. It's top of the range. I'm good. Now I would look for something else in here for maybe that, but maybe in here someplace. I don't know. I'm not. I've tried in the past, like for example, having a runner, and I'm not really a big fan of it, and that's my style. I find myself waiting and watching and waiting, and then it just comes back and stops me out. And I'm trying to catch a runner, and like it just doesn't. Now, like it's a bigger point of discussion, because there's days where you can give it room to run because it's volatile, or there are bigger swings. That makes sense to me. But other days when you're not anticipating that to it's maybe an inside day or something like this, you're not looking for a runner. Why would you put a runner on? That's where I'll take Robert Rother's all in, all out.
Yeah, I totally agree with what you're saying. I can see that. And since I've joined Bookmap and learning like the market mechanics and stuff, like kind of filled in those missing pieces of this puzzle. But I totally can relate. Yeah, because like in Forex, sometimes you have to wait, and you want the nice profit, you have to sit in there, and then I would also have it where to reverse all the way back down again. But I think with this understanding that I have, I think I can do some damage. But I have to stick to my goals, finish one thing, and then add on. I plan to go back to currencies again. It'll be nice to see if I can get some revenge.
Yeah.
Anyways, yeah, I appreciate the feedback.
Yeah. Excellent. All right. Well, thank you so much, Stephen. And
Thanks, guys.
yeah. And thank you, Stan. And Stan, I don't know, did I cut you short? Was there another comment you wanted to make?
No, that's perfect.
Oh, okay.
Yeah, great job.
And then let's see, you got one more here. We've got, I'm sorry, we got two more. All right, let's dive in. Let's go for it. So we've got SharkBlue.
So yeah, no worry. I just like I put like the note and SharkBlue and Questro have made like huge notes about what they were looking for.
Yeah.
And that's really a strong work for both of them. I really appreciate exactly what to explain us exactly what they are looking for, the setup, the laws that they are allowing, the money management. Everything is in there actually, and yeah, it's so complete. Then I will yeah just throw you flowers. But yeah, that's we can see like SharkBlue as usual. So he's looking at his 1, 2, 3 buttons, and he catch it great. He's trading through Bookmap. He is highlighting the order flow concept. You are using like the VP aspect plus the CVD. You have everything. I think you have your setup. No, you have to just to have the confidence to do it in life. I think maybe in a Profim or other potential. Just try it and you will see. I will just say for the entry in this case. So, is it a stop order or a market if touch?
Okay, there you go.
I tend to use limit stops.
All right,
okay.
yeah. So yeah, that's perfect. Yeah, because I think if you just set a stop, you might get a slippage, and the potential to not being filled where you want to enter.
I also want to catch that move with the momentum of price at that time.
Yeah.
Yeah, but that's perfect. But you know exactly what you're looking for. So yeah, just great job. Keep posting. It's so complete. Really, I appreciate what you're doing.
No, thank you, Stan. I appreciate that. I am very much enjoying trading from the Bookmap as well as replaying from the Bookmap. It's fantastic.
Nice. That's great to hear. I totally agree with Stan on all of that. Like, in term and guys, I always kind of, during the Bookmap education, kind of cringe a little bit. I mean, this is a perfect entry. You waited, you saw that volume, but you had your stop up here. It took you into that trade, and you didn't get the slippage either, which is great. But you've got all of this volume here helping you in your 1, 2, 3 pattern. You got these guys on the hook as well as fuel to the fire upwards. So you got some really, really nice things in here. What I'm kind of cringe about, and I don't feel so bad about it because I was watching a video the other day from SNB Capital, and they were getting their entries into these areas as well. And they're looking for this kind of confluence or this kind of what is it, the right word, not conviction, but like confidence, or anyway, whatever it is, this is where it told them, okay, we know now that this is likely going to work. That's what you did, and you traded up into your high liquidity up here. Beautiful. So I don't feel so bad about that. What I was kind of mentioning before about Stephen was, now this is a little bit different pattern, but he waited for the kind of impulse move, and then he got in on selling down here for that next leg. So this is different. This is more of a reversal, but anyway, that's not bad in my book, because you've got the buyers in control here, and if you don't have a lot of selling in here, and you do have some, so there's some risk on that one, and you don't have, if you have some liquidity underneath as well, that's really helpful. But it's just a funny thing. Like, it looks pretty horrible as an entry, but your criteria matches perfectly, your pattern matches perfectly, and then you've even got a measured move in here between that and this for your take profits.
Yeah, and I forgot to mention, but it is why he didn't close the trade when sellers came back. It's because we had this conviction with buyers, and it's why it's good too. Like he will even like put post notes about why he decided to keep the trade in, because we went about one tick front of his take profit, but still he stay in there due to the order flow, and
Yeah.
I think very great too. Then he was mentioning that, so yeah, great job.
Yeah. Conviction, that was the word I was looking for. Yeah, and that's when you can have conviction in it. So yeah, I don't know, anything more you wanted to mention, Shark?
I will stand by my conviction, Bruce. And thank you guys for the insight. I really do appreciate it.
Yeah, really tight, tight trade, nicely done. It's like, just like Stan had mentioned, I think it's great example within your plan. So yeah, well done. Let's
Thanks,
see
guys.
here. Questo Mondo, we haven't had you before. We tried to go over you the other day, or other week. So Stan, let's take it away in here.
So yeah,
and he was in earlier. I guess he has left. He has left again. Let's do this. He's left. I would love to give the mic to him. We if you don't mind, Stan, we'll go over him next time first.
sounds good. Yeah, perfect.
Yeah?
I'll keep it. Yeah, it sounds good.
Yeah.
Oh yeah, but he did do a great job too. If you just see the notes that he made,
Yeah.
no, already. No.
Oh,
If you go in the Notion,
yeah. Here, all these
yeah,
notes. Yeah.
exactly, all
Yeah.
of those. So yeah, again, the journal, what he was looking for, his experience, everything is noted there. So that's great.
Yeah.
But I will cover it next time.
Okay. Yeah. Looking forward to it. All right, guys, another long one, 2 hours. But I mean, I know we're, some people start to kind of trickle out, but really good stuff. Really good to see, like, hang in there with, because like SharkBlue stuff here, it's really good, really nice, and there's really a lot of reasons to take this trade at that point, even though it's at the top of the range. So some of these things, like this whole thing is like the pieces. This is the pieces coming together, in my opinion, and it's inspiring. So really good stuff, and worthy to cover it, I think, during these long Bookmap Academy meetings. So thank you guys so much, and Stan, thank you for your coaching. Dan, thank you for staying late as well. All right, so let's wrap it up. Thanks again, guys, and we will catch up with you next week. Okay, next week's going to be really tough as a note because it's going to be a rollover period, and we've just had a lot of data, a lot of volatility. A lot of players probably doing many different things, and it might not make sense in the order flow because of that. So we know, like in the order flow in general, like it's about the behavior of the players. If the behavior of the players is going to be different because of a different period, then we might not be able to read their intentions as well. All right, so there's a little bit of logic to it. Thanks for coming, everybody. Have a great evening, and we'll catch you next time.
Thank you. Bye.
Bye-bye.